I'm Deborah Borchardt, and this is your midday market update. Well, welcome to September. So far, we are off to a good start. We were much higher when we first started this morning, pulled back just a little bit, but we're still up about 20 on the Dow right now. S&P 500 and the NASDAQ are both in the green territory. Here's the thing, though. September, traditionally a really bad month. I'm talking to Keith Bliss from Cuttone. So, Keith, you know, we always hear about the crashes in October, but September is really a very bad month for performance.
Yeah, that's right. So you're right. October gets the headlines because of the crashes in 29 and 87 in the last century. But you're right. September can be a weak month if you go back over the entire lifespan of the stock market. Now, interestingly, I went and looked at the last 20 years, and in September in the last 20 years, it's actually been up 11 out of the 9 years. But the problem you get in September is volatility comes back. People come back to work after the summer holidays. We generally have some legislative fiascos that are looming, like we're going to have this year, because there's going to be another debt ceiling debate coming up in a couple of weeks. So we get a lot of volatility in there. The biggest percentage mover that we had in September was in 2008, excuse me, and that was a down month where we were down almost 10% in that month on the S&P. So yeah, fasten your seatbelt. September is always a bumpy ride.
You know, of course, we have this backdrop of Syria that we've got going on, you know, whether we're going to shoot or not. Does it feel like the market has kind of started to move past that, or do you think we're going to get whipsawed by these headlines?
Expect volatility. That's my expectation. Last week, we thought the market sold off a little too hard, and we got oversold on the S&P around 1630 or so. It traded a little bit below that. So this move, based upon our work, is not all that surprising. We're getting a little bit of a bump here because the war drums have seemed to be silenced a little bit today. I suspect, though, that as we move through the week that there will be some action taken in Syria, whatever that encompasses. I have no idea, but that will whipsaw us back and forth. But we think right here with this market, we should push a little bit higher on the S&P into the 1665, 1670 range on this move.
Are you guys getting defensive?
Have been for a while. Once we traded up to the highs above 1700 on the S&P, it was the right time to take some money off the table, rotate some money into some more defensive stocks. The market felt heavy at the end of August, in the end of August, so you wanted to do that a little bit, and sure enough, we saw the pullback. We're going to be stuck in a trading range, I think, here probably for the remainder of the year. I'd be very surprised if we push to newer highs up in the 1720, 1730 region. And you can make money in here. You just got to be very nimble, very agile, and keep some powder dry.
All right, well, there you go. There's what's happening in the market. And as I talk, we are starting to trim those gains, continuing to trim those gains here at the stock exchange. That's Keith Bliss from Cuttone, and I'm Deborah Borchardt with The Street.